Hello everybody, Jackson here from the Wall Squad. Today we'll be talking about the PEG ratio. What is it and how to use it? The PEG ratio is elite because it measures three valuable pieces of information: the valuation of the company, the earnings, and the earnings growth. Now usually you don't see a measurement looking at the growth and valuation of the company, so that's why we're going to use the PEG ratio today. Usually you just see the valuation, right? The PE ratio. That measures just valuation and earnings, right? No growth whatsoever. So you could see a company trading at 200 PE ratio and you will be instantly turned off, right? 200 is a lot. But if you see that the company is growing absurdly, then you will kind of see it makes sense to invest in that company. So you don't want to miss out on those opportunities, right? So let's look at the PEG ratio today. Let's calculate it first. I believe when you calculate a ratio, you get a deeper sense of what it actually means when you look at the actual metrics building the ratio, right? If I just say, here's a PEG ratio, over 1, not good. Under 1, that's good, right? That's all you're going to be looking for. But if I give you the actual details of the ratio, you're going to be looking more into the company. So that's what we're doing today. So in order to calculate the PEG ratio, of course, you need the stock price. Like I said, the earnings per share, EPS, and the 5-year EPS growth rate of the last 5 years, the average of that. What you need to do is divide the stock price by the EPS, and then divide that by the earnings growth. The stock price and EPS can be found on any website, really, but the earnings growth could be, we're going to use gurufocus.com today. So using the PEG ratio, after you calculate it, of course, you need to analyze it, right? Over 1 or 1.25, generally not good. Use this as a key, right? Under 1, that's good, right? That's a buy. Over 1, generally not too good. You're going to see a lot of like over 2 in this market just because the market's so high and earnings are still recovering from COVID. But try to avoid those types of stocks, right? We're going to look at a couple today. We're going to actually look into the ratio. But use this as a general guide. Under 0.5, of course, buy it. Under 1, look into it. Of course, do research for all of them. I'm just saying, the less the PEG ratio, the more conviction you should have of buying that stock. So we've already looked into these ratios to see. We looked on Guru Focus, but let's do that again. On Visa, you can see stock price is $235, $4.95 EPS, and 15% average growth rate. So let's look at the stock price, $235. EPS is right here, 4.95, and the 5-year growth rate is 15%. So how do you do this? Well, first we do 235 divided by 4.95. We get 47. That's the PE ratio of Visa. Then we divide that by the 5-year earnings growth of 15%. And we get 3.16. That's the PEG ratio. Now, we did the same thing for Home Depot and PayPal. You can see they're all above 2. Home Depot being the cheapest. Generally, I would not invest in these stocks just because of this very reason, right? If PayPal were to get the similar growth rate and cut more than half, then it'd be worth looking into. But at this rate, it doesn't make sense using this ratio. Maybe we could look into it other ways, but over a 3 or even a 2, not a good sign to buy the stock. So just a quick video today, just describing the PEG ratio and how to find it. I use gurufocus.com. That way you can see the stock price, the EPS, and the 5-year growth rate, right? For Home Depot, same thing, 337, EPS of 13.71, and a 5-year growth rate of 11.7. And you get a PEG ratio of 2.1. Still not very good. You want under 1.25 at the very least. So just keep this in mind next time you're looking at a company, right? This doesn't have to be industry specific like the comparison I did last video. All you need to do is find these 3 metrics and plug it in to get your PEG ratio. If it's under a 1 or 1.2, then it's generally a good sign, right? If it's over that, You might have to look into it a lot more or just simply avoid it. So that's the video. Thank you for watching, and stay tuned for my video dropping Monday. Thanks, guys.